Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Nic Pillow and Tim Wynn-Jones from Blackfinch to talk about the Blackfinch Spring VCT. Hello Nic, hello Tim, welcome to the studio.
Thank you. Thanks.
So we're here to talk about the Blackfinch Spring VCT. Nic, could you tell us more about the VCT?
Yeah, the Blackfinch Spring VCT is a young, rapidly growing VCT launched 6 years ago. We invest in technology-enabled companies on their growth journey. Companies that are typical, actually, of my background and that of several other members of the team, where in my case, I got a PhD many years ago, then worked through a series of very successful startup companies and the big companies that bought them out, like Nokia. Then co-founded and ran my own startup before joining Blackfinch just before the VCT launched.
Oh, very interesting. What was your startup?
Mine was an education technology company. It was all about getting people to learn together online, which was quite cutting edge before COVID.
And Tim, Blackfinch Ventures, who are they and what's your role there?
Thanks, Jonathan. So Blackfinch Ventures is part of Blackfinch Group. I personally work across Blackfinch Group in a number of different areas spanning new product development and investor relations. My background is in energy, but I work very closely with the ventures team, particularly when we look at energy startup opportunities, energy tech startup opportunities. My background is in energy, and then I've come into more of a group role working across group with our energy and real estate part of the business as well.
And Tim, the wider Blackfinch Group has grown quite considerably in recent years, I'd say. Lots of different parts to Blackfinch now. Maybe you could tell us a little bit more about the group, but then Blackfinch Ventures as well.
Yeah, sure. So our business model is to raise capital via independent financial advisors and from direct investors into a number of different tax-efficient investment products. And those span various different business units. So Blackfinch Ventures, which we'll talk more about shortly, but then we also have our Adapt IHT fund, which has two business units, Blackfinch Energy, which owns and operates more than 150 megawatts of wind and solar assets in the UK. And that ranges from a couple of wind turbines in Scotland up to a 25 megawatt solar farm in Hampshire. And we also have Blackfinch Property, which is real estate and specifically property development finance. We also have Blackfinch Asset Management, which is discretionary fund management, so various model portfolios and listed equities.
And then Blackfinch Ventures, home in the VCT. It's been growing reasonably quickly, I'd say, past couple of years.
So for the ventures team, investment team itself, there are 12 of us. And all supported by then the other teams in Blackfinch. So we have a legal team, we have a technology team, operations, all sorts that that really support us, so that we are completely focused on the investments.
Turning to the investments, where is the VCT looking to invest?
So we invest in, as I said, growth stage technology-enabled companies, and by growth stage we mean companies that have convinced us that they've got a market for what they're selling, they know what they're doing, they've got the core team to be able to do it, and they need funding to be able to grow that and scale it up. And that's what gives us those exciting return potential for those companies. And then the tech-enabled, very broad diversification of technology, apart from medical technology and life sciences, which is quite specialist. We want as broad a range as possible, and we have things from well-being, helping elderly people at home, to companies powering the digital e-commerce with marketing online, or very physical products like for manufacturing processes. So that really broad range of technology.
Oh, very interesting. And so, do you have any examples of companies you've backed recently?
Nic mentioned we are very well diversified across a number of different sectors, technologies, age and stage of company. We do lean into the group expertise that we have in a lot of the domain expertise that we have in the group, particularly across things like energy. Within the ventures team, we have 3 PhDs on the team, so we have very strong links into academia and incubators, which gives us a particular foothold in deep tech. And also as a financial services company with our own CTO, a team of in-house developers, we also have a lot of expertise in fintech. So even though we are multidisciplinary and we focus on diversification across software, hardware, we do lean into those areas. So the first example is probably in the energy transition space, where we're focused on early stage companies and growth companies, as Nic said, that are really aiding the change in how we power our homes, our businesses, the way that we transport goods and services across the world. So we invested in a company called GT Wings, which is manufacturing proprietary wind propulsion technology. So it's almost, if you imagine an aeroplane wing that sits vertically on the front of a commercial ship. And by harnessing the power of the wind, it can reduce the fuel consumption of a transatlantic crossing by about 20 to 30%. So significant operational savings for the ship operators, but also real benefits in terms of lowering emissions as well, because there are so many stringent environmental laws coming into place around both portside, but also in transit shipping to reduce those emissions. So it's a really interesting business that has now completed a number of transatlantic crossings with its first product and is now working on version 2 of that wing.
And any other examples? Nic, you had a fantastic space investment.
Yes,
recently.
yes. So the other two themes we think are particularly interesting at the moment are deep tech and fintech. And with deep tech, it's all about a company that's got some underlying technology, typically with patents, often a university spin-out, which gives it a really defensible, long-term proposition against anybody else trying to do the same things. And there's a really nice example, one of our newest investments, Spaceflux, which tracks what's going on in space. And they've created these custom, quite small telescopes that can monitor things as small as 2.5 centimeters whizzing around the Earth at unbelievable speeds, and then can sell that information to commercial satellite operators who want to protect their satellites, but also to governments who are very keen on knowing what's going on up there. And I didn't realize it was quite so aggressive up in space, but you've got satellites sort of moving around, looking at each other all the time, moving position. And so governments are very keen to know what other satellites are doing up there. So that's Spaceflux. And the final theme, as I mentioned, is fintech, so financial technology. And a really nice example is a company we invested in a few years ago now, Currensea, which is, if you go abroad, get a Currensea card. It is amazing. It's a travel debit card, saves you all the extortionate bank charges and marked up exchange rates. And the beauty of this one, rather than any others, is you don't need to transfer money into another account. It links directly to your own bank account, and it's like spending from your own bank account, but without all those charges. And the really exciting thing that's happened subsequently, this is the sort of typical journey you get with good companies, they've now found a new market, applying that same technology that links to any bank to be able to offer loyalty debit cards. And they launched a little while ago with Hilton Hotels. So the Hilton Honors loyalty debit card is powered by Currensea. And now, just a couple of weeks ago, they launched a similar scheme with Marriott. And that's offering some very, very exciting growth prospects for Currensea.
Oh, very interesting. That's one of the larger holdings in the VCT.
It is. It's getting up to be one of the larger holdings, and we have high hopes for its continued growth.
Very good. And I guess you're still a relatively new VCT. Everyone gets the exit question. I guess any exits within the VCT? Any exits coming soon? What do you think, Tim?
Obviously, we can't give too much information about exits that we see coming soon. However, it's obviously been a very challenging time in the market over the last few years with the wider macroeconomic issues. And as you mentioned, we are still a relatively young VCT. So we are very encouraged by the progress being made by many of the companies in the portfolio. We see a lot of progress and growth in the underlying investments that we've made. And we're very hopeful of coming into a period where we will start to see some of those exits materialise.
This may be worth adding that the market did come down quite a long way in 2022, which is why it's not been a great time recently to get exits. But we, on our EIS portfolios, which is also managed by the ventures team, we did get one exit away early in 2022. which was a very nice return for them for the EIS investors. So we know we can do it. It's just about applying that to the VCT now. Hopefully the market's coming back up again.
Good. And so turning to risks, how risky would you say your VCT is compared to peers?
You should never pretend that any VCT isn't anything but high risk. That's why you get the tax reliefs, and we wouldn't pretend otherwise. But we've now got to a really nice size. We've got 35 companies in the portfolio, so we're really well diversified. Top 10 holdings, comfortably below 50%. So we're not overexposed on any company. And the most we could ever lose from one company is the amount that we've invested in it. The beauty of investing in these types of high growth companies is the upside is unlimited. And so we've got that, I think, good diversification that protects against any significant deterioration. But at the same time, if we get some of these big exits in the future, then it's not so big that we can't get a meaningful special dividend out to our investors.
Well, that would be nice. I'd say, just to summarise everything we've just discussed, for those that are looking to back a VCT this year, I guess with the rule changes, people might be looking to back more than one VCT, maybe more VCTs than they have done in previous years. Why might they venture into Blackfinch Spring VCT? Tim, is this your question?
I think so. I think it's honestly the calibre of the team and the calibre of the opportunities that we source. I think that we're constantly scanning the horizon for new investment opportunities. We've built a very good reputation within the investment community and with companies seeking to raise. So quite often we find people who will come to us and say, we specifically want to work with Blackfinch. We want investment from Blackfinch because you understand deep tech, because you understand our industry. You have a wealth of talent within your team that has direct operational experience in the industry we're trying to sell into. So we can really add a lot of value that way. So I'd say it's those two things. It's the team and also the quality of the opportunities that we source and back and qualify to take through to investment and growth.
And it's a much more mature VCT portfolio now as well, actually. Time really does fly by, but it feels you're sort of 4 years in. It's a much larger portfolio.
Yes, first investment was September 2020. So we've had 5 years now. It has flown by.
And now a regular dividend as well, which is obviously key for attractive.
Yeah.
Very good.
Well, Nic Pillow, Tim Wynn-Jones of Blackfinch Ventures, thank you very much.
Thank you.
If you're watching on YouTube, please press like and subscribe to the channel for more.